Another video. My name is Justin, and today the stock market is sponsored by the color red. As we can note on the screen here, we can see that it's red almost everywhere, right? There's not a lot of areas in the market today you could go hide and find some relief. We see energy red, technology red, healthcare red, and chips are red as well. So we're going to talk briefly in a moment about what we need to do right now, because on the weekend deep dive, we talked about how if we're going to be getting a true move lower, what we want to see is that technology is going to be leading to the downside. That is exactly what we see today. We see Tesla down by 5, Microsoft down by 4, Apple down by 2.5, Google down by 3, Facebook down by 2.5, and Amazon down by 3. So stay tuned. In about 30 seconds, 60 seconds, I will tell you what we need to do right now, because we're seeing some warning signs here. DXY, or the dollar, is right back at 100 here. It is throttling 100. That is going to be bearish for us if we can't hold it, meaning can't get back below. Why? We're putting in a W, which usually means we're going to go higher. How much higher? 106, 120 are the areas we mentioned on the weekend. Second thing here is that the TNX, or the 10-year Treasury note, is continuing to march. It looks like Apple, right? Boom. Backtest, boom. It's well above the 200 monthly moving average, and this is a 30-year pattern. So when this breaks, you better pay attention to it. The reason why it's so important is because we have the CPI print coming out tomorrow. And what we want to do is make sure that we're not being blindly bullish. And if we're getting warning signs that we are no longer bullish and we're actually bearish, that's what we want to pay attention to here. So monthly continuation, well, it's continuing to the downside. TINA, well, again, that case looks a lot less strong this week. 454 seems like it's an impenetrable fortress. Recession risk, yep, hearing about that. Tech leading the decline, check. DXY, TNX breakouts, check. Oh, crap. Are we bullish and wrong? That's the question. And the reason why it's important is because as we look here, this is the options chain for today. Again, April 11th for SPY. They took it all the way down to the lower strike of 440, where they were able to actually get what they wanted. These are pretty much all in the money. We closed just above 440 to the close, which means that there were a whole bunch of puts getting paid out. Looking forward to Wednesday. And again, we got 3 out of 4 days this week, which are going to be OPEX. Only tomorrow is not an expiry. So what do we have to do right now and pay attention to? We got to pay attention to 440. Why? Because they're going after the same area for Wednesday. And there's $3.20 in premium. What does that mean? Oh man, that means we're going to be at 437s. Yep, 4365, 437 would be the area to target if these are going to get minted. And looking at Thursday, this is where we have to really pay attention here. If we're bullish, we have to be mindful that we could be going lower. How much lower? 440. That's already got knocked out today. 435 would be the next stop. And there's tons of puts and motivation here as well. We're seeing follow through. Again, notably at 440, there is a ton of puts here. So what do we do right now? We have to be mindful that the base case is likely wrong now. At least right now, I'm getting some early indications that we're wrong. We're getting a lot of bearish signals. Our why are we bullish and why are we bearish is clearly telling us that we're bearish. What could surprise us? Well, CPI comes out pre-market tomorrow. So what we want to do right now is try to assess in real time and know whether or not we are currently in damage control mode or if we are in opportunity seeking mode. So just to take a moment here and try to explain things. So there's 2 areas you can be in. That's what I try to say. There's 2 things you can do. We can currently be in damage control. So damage control over here, and then opportunity seeking. So if you have a lot of stocks which are giving you damage, you're not going to be looking for opportunities. So the most important thing to do right now is to make sure that your portfolio is full of strong stocks that you feel confident holding onto into a downturn. And if you're currently in damage control mode, you're not going to be able to find the opportunities out there. By the way, there are some. There's still some stocks that are green here. Not a lot, but there's still some here like T, like GM, like Ford. So what we want to do is just make sure that if we're going to get a repeat of today tomorrow, when do you know you're wrong? If you didn't trim last week, you didn't trim today, well, again, you probably got a lot more damage to control. So first of all, if you have any stocks that are currently in damage control mode, you should not be looking for opportunities. You should only be focusing on this side here. Do not take on fresh risk if you do not already know what you're going to do with your current portfolio. And I'll tell you what I did today. I sold covered calls on my remaining stocks that I do not want to sell, but I want to be hedged. So what I am doing is I am right? I'm premeditating what is damage control. I did a lot of trimming last week, sold some stocks back flat, sold some stocks red. Does not hurt my feelings to be wrong. It hurts my feelings to stay wrong and lose more. So right now, I do not have anything in my current portfolio which I need to damage control. So what am I going to be looking for tomorrow on the gap down if it happens? I'll be looking for opportunities. I am not going to be revisiting anything that I touched here today. I'm going to be looking for opportunities. So for you, if you don't know how to do covered calls, or if you haven't already trimmed, by the way, the market's open until 5 p.m. tonight. And the first thing you need to do right now is to make sure that you're not in damage control mode. If you're in damage control mode and it gets worse tomorrow, market ticks down into fear, which it might do, you're going to get scared. And you're going to be scared when? At a time when you shouldn't be. So please do it tonight. Please do your homework. And if you're part of the group, please go to the help desk and ask for support there. And if not, please do this exercise on your own. I believe on Friday we went through and briefly touched on what makes a stock strong, and we have those educational videos that are private inside the group as well. That's the first thing you want to do. Second thing is that if at the open tomorrow we're gapping down again, which we did today, or what are you going to do? Premeditate it. What if we gap down? What am I going to do? What if we gap up? What am I going to do? And what if we open flat? What am I going to do? Why? Well, because the CPI print is the most important data point for me this week before we get earnings season kicking off tomorrow, and then also, on Wednesday. Then we got OPEX on Thursday. So in my opinion, if we're going to get a move lower and these gaps are not going to fill, because remember, we still got a gap at 400. So we can leave gaps on the chart. It's not healthy, but it's definitely possible. So please just be mindful of that. That's my word of caution here as we go through. And now let's have a look at some of our normal charts to see what else is telling us that's a problem here. We don't have to look that far though. We're just going to look at these here. So why bull or bear? Well, let's look at our monthly chart. That's an easy thing to look at here. What does it tell us? Oh crap, right? Yuck. That's not a nice candle. We don't like looking at that like bulls. So I'll tell you that this is still an inside bar, but my personal bull thesis was that our quarterly chart was going to be flipping bullish. Well, this does not look like a bull move. It looks like a rejection and a head and shoulders. Yuck. TINA. Well, if the TINA alternative was that you got to choose the right stocks, there's no stocks today that collectively are doing really well. So I don't know the TINA alternative is really all that strong. We are expecting that the CPI print tomorrow could, keyword being could, be the peak of it, where we have that energy really ramping up. And again, what's the reaction going to be? I don't know. So if I don't know, if in doubt, GTFO, right? Get out. If in doubt, get out. That's what I did today. I got out, hedged. Looking at the bear case now, again, I don't like saying this, but I got my signal that if we hold below the 50 weekly MA on SPY going into the close, again, what do we have here? Well, we have a potential inverse head and shoulders, but this looks like a pivot to the downside off the 50 MA. This is terrible. This is bearish continuation, and the bears are flexing. Why? Well, not only did we push below the 50 MA, we're now also below the 50 DMA. So in my opinion, this IHS is becoming much less reliable. Even if it gets saved, it's going to turn into a massive hammer. We're going to get a lower wick, and we're going to push up. But I'm not really confident. I'm not as confident as I was like even on Friday. Why? Well, look at the price action. It's terrible. We left a hole in the chart here too, right? Left a hole here. This gap did get filled. So technically, S&P can resume down more healthily, and the gap here is not really all that big, right? The low here is 450.63. The high here is 439.39. It's only about a 1 point gap. This looks dramatically less worse than QQQ. This looks terrible. And right now we got a second one here. Yuck. So what we mentioned is that 454 being an impenetrable fortress on this week. So far, check. We got it. Recession risk? Yep. Tech leading to the downside? Yep. Double gap down. DXY and TNX breakouts? Double check. So now let's have a look here at QQQ on our monthly chart and our weekly chart. Why? Well, because we're making dramatic moves to the downside. This is nasty. So looking here, we can note that we're almost all the way back to the green line. We've almost engulfed the whole entire month. Sorry, we've engulfed the real body. If we go lower, like below 337, I think we got to hit these lows now, roughly 320. I don't see how we don't do it. Why? Well, that's just how technical analysis works. If people have been buying over the last 4 weeks, and now they're like, oh man, what if I'm wrong? We talked about this on the weekend too. They're going to be selling back like I did today. They're going to do it now. They're not going to wait. So those are the big things we have to be mindful of here. And if we look now at our base case for April, again, Tina to stocks. Well, it's de-risking everywhere today. Energy's off, and that should have normally helped tech or the growth trade. It did not. So if it didn't, we're getting a warning here. 454 is a pivot. Yep, to the downside this time. Bulls and bears fight for direction. Right now, there's no edge. Well, the bears are flexing, and they got all those puts paid up. That's pretty impressive to me. And then we have the earnings confirmation starting, that should be the 13th, my apologies, tomorrow with banks, and then the 15th for, is it the 15th? 19th. Oops, I made a double error on those. 19th, we got Netflix kicking off earnings. So now if we look here, again, if we're getting tech leading to the downside, we have to ask ourselves, is this just scariness, or is there more here? We look at the last 1 week. Right, technology still obviously the loser. Chips leading tech, tech leading spyware, downtown. We look at the last 3 months. It's a lot more mixed, but you can clearly see there's not a lot of participation here from technology. So what I want to do now is dive a little bit deeper inside of the trillion-dollar companies to see whether or not we're getting any warnings flashed here. As of right now, in my opinion, on the weekend we talked about how Apple could backtest this 165 area. As of right now, this is still a backtest. It's down by 2.5. It's not terrible yet. If we lose the 165 area, though, I don't see how we don't go down to 153. That is going to definitely drag on the market. Why? Well, Apple's the biggest block. If Apple goes down, the market goes down. It works. That's how it works. Second biggest block, oh man, it's Microsoft. Yep. So second biggest block here is going to be Microsoft. It's right back to the green line, right back to support. If support doesn't hold, we're going to go where? Right back down to these relative lows, right? That's not a great look either. Why? It's now confirming it's a head and shoulders here. Next one to look at here is going to be Google. So Google, yuck, right? Rejecting offer downtrend, respecting it, closing at the low. I don't know. I'm looking at Amazon. Yep. Right, gap down, fill the gap, sell off. That's a healthy move lower. Not what I like to see, but that's the reality we live in right now. Looking at Tesla. Excuse me. Try to fill the gap here. So gap down, pump up, and fade to the close. The low here, 1021 going into last week. High here, 1008. 10,008. So that's close enough. And that cyber whatever that happened over the weekend was not enough. What it seems like is I'm actually not going to mention it. I'm just going to leave it there. There's enough pain to go around today. Don't need to latch onto that. And then even NVIDIA, right? Yuck. So hard landing on the 50, gap down, and no attempt to bounce. Just flush it. Yuck. This is not nice at all. Right? Even utilities are down. So everything's down. Utilities, right? Healthcare. What else do we got? Energy, right? Yuck. There's nothing out there that's working unless you're buying basically 10-year notes. So the idea here is that we have to ask ourselves whether or not we want to remain long. And if we are going to remain long, are we going to hedge ourselves? Are we going to rotate it into something else that's going to work? Are we going to raise cash to diversify? Or are we going to hold on tight? So here's what I would recommend. I mentioned before what you need to do right now. Well, first of all, you need to make sure that you're not in damage control mode. That is the most important thing because there's something called paralysis analysis that if you don't know what to do and you're realizing that, shoulda, woulda, coulda, shoulda sold on Friday, woulda sold when my boss called me into a meeting, whatever, right? There's always going to be excuses. So over here we got damage control. Over here we got opportunity seeking. I'm telling you that if you reduce the risk so that you can sleep at night tonight, you're going to feel a lot better. You can buy back the stocks you sold here in damage control literally the next day. So the stocks that I've been trimming, I'm watching, and I got very clear areas for me to get back in. If we start to move higher, I'm going to wait for the first back test. Why? Because we're dealing with weekly candles right now, and everything is leading and pointing down. So I'm not going to fight it. And this could be the start of more. So the start of more could mean that we're going to be going down a lot more. In terms of whether or not you should be looking for opportunities, I'll give you a clue here too. So let me actually see if there's a stock that's quite strong here that I want to maybe look at. All right, so stock I want to look at here, and I'm going to talk about this one because it's one of my favorite stocks, to be honest. So what we're going to do right now is we're going to compare the candle on QQQ to the candle on Cloudflare or net. So over here we can note that, right, close of the low of the week, and then gap down and flush. Yuck. Looking over here at net, something's different here, right, isn't it? Yeah, matched last week, and then this week it's like it opened at 107 and closing at 109.6. This stock is strong. Doesn't mean you buy it right here, right now. That's up to you. You got to know your risk tolerance. But for me, this is a stock that I am being told you want to keep it in the opportunity seeking mode. Full disclosure, I am net long and it is hedged, but I'm still long on the stock. So what does that mean? There's a reason why I held on to net and did not sell it back. On the flip side, a stock that I did sell back, as an example here, is BABA. So let's look over here at BABA. Right. So this one doesn't actually look all that terrible either. I sold it back the last week. So let's actually look at Apple. I don't own this one, but this one right here, regardless of the psychological level or whether it's above the 50 or not, this is not what you want to see. Why? There's pressure building up here. Just like there's pressure building up here to the upside, this is pressure building up to the downside. Why? Close at the low, currently at the low. And we have all the way till Thursday to know whether or not this pattern is going to break. So that's all I want to leave you with, is to make sure that if you're able to get things off of your damage control list, even if it means raising cash and buying them higher, I would recommend you do the homework tonight. Because if this move's going to happen, the biggest catalyst that I'm looking for this week, again, it's CPI. It comes out tomorrow at 8:30 a.m. It's expected to be the highest print yet this year. So please be ready for it. And be ready for what you want for opportunities, because there's always opportunities out there. And I'll show you a stock here, for example. So if you would have been able to avoid only looking at the pain, there's a stock like CCJ, which is closing green today. It's up by 1%. So buying something that is not in your normal diversified portfolio, in your normal portfolio, if you're all tech heavy, well, look here, right? There's nothing but green volume. And the stock is going up even if the market's going down and it's bull breaking. So having something other than all in tech is likely going to help you into this next move if the move lower is real. So make sure your stocks are strong, and if they're not, don't ignore it. Make a plan for it. And if you don't know what else to do, I encourage you to watch the video that'll come up here in a moment, where you can watch my analysis to get prepared for this week. Thank you very much for watching, and I look forward to seeing you tomorrow.